Well, let's talk about mortgages again. The other day I was talking about adjustable rate mortgages and how dangerous I think they are and how many times I've seen them really harm people when those rates come to adjust. Well, now the government announced they're looking at 50-year mortgages and approving those. And if I thought an adjustable rate mortgages was bad and dangerous, I think a 50-year mortgage is off the charts dangerous. So let's talk about a little bit of the numbers. If you're buying your average $400,000 home, you put 10% or $40,000 down, it's a $360,000 mortgage. On a 30-year loan, you're talking about $438,000 or so in interest. That same loan, if you do it for 50 years, you're talking about over $800,000 in interest, or about an extra $400,000 in interest. So you might be thinking, yeah, but my payment's going to be a whole lot lower, right? Not really. The median home, according to CNBC, you're looking at $2,056 a month on a 30-year mortgage. If you did a 50-year mortgage, you're going to be looking at $1,823 a month in your mortgage payment, a saving of $233. In order to add 20 years to your mortgage to save $233 a month. To me, that only benefits the home builders, benefits the banks, certainly bad for us. Now, they did try this already in Japan. They did 50 and 100-year mortgages. They called them multi-generational loans. This was back in the 90s, their big housing bubble. They realized that was a bad idea and they don't really offer those anymore. But how would you like to take out a mortgage that you know your kids are going to inherit from you? Well, then they will take the mortgage over. Now, let's say, hey, you know what? The $200 a month savings to me, it matters. I'm going to try to do this. Nobody knows what the future holds. So you buy in a house, you may be 100% convinced this is your forever home, but you have divorce, loss of income, job transfer, a whole lot of reasons people decide to move. If you have a 50-year mortgage, you're 4 years into it, 5 years into it, how much equity do you think you're going to have? Even on a 30-year, it gets tough. That's why I always encourage people, if there's any way you can do a 15-year mortgage, that is by far your best choice. You're going to get a lower interest rate, and you're going to start building equity up right away. So that's something I always suggest you can do. If there's any way you can get a house that fits your needs, go with the smaller house, go with the smaller mortgage, get it paid off, and certainly don't even think about getting a 50-year mortgage. Your future financial self will thank you. And it's one of the few guarantees I'll make when it comes to money.